The first half of this year, you've done revenue slightly above that 600 crore mark. You had guided for 1100 crores for the full year with 30% margins. Do you think you will better that? The 70% revenue growth, can you break it up in terms of realization as well as volumes?
So, yes, we will certainly better the 1100. We are targeting 1200 crores for the year end. EBITDA margin would be similar, 29 to 30%. And the revenue growth is largely come from market price increase, which has really helped us grow our top line. Volume growth is not much. We've grown on 20% on our specialty products, but the other basic writing and printing paper is about 8%. So overall about 10% volume growth, but largely the price growth.
All right. Hi, Pavan. Congratulations on a good quarter. You're talking about 1,200 crores. We spoke around 45 days ago or so, and that time you're talking about 1,100 crores. So you're revising your guidance upwards. Just wanted to ask you, you're doing around 340 crores of revenues, and I think you're at peak capacity levels. So FY23, you'll give a good growth. But in FY24, then there'll be no growth. Just wanted to confirm that, or do you have some plans to increase capacity out there? And margins, you're confident, right? You'll hold it around 29 to around 30%.
Yes, we are confident of holding margins because a lot is happening on the cost-cutting account as well. So even if prices remain stable thereabout, we will be able to maintain these margins. And yes, next year growth will come about by increased capacities. We are investing in upgrading our machines as well, where we should be able to get about 15% growth next year.
So what's the kind of investment that you're looking in increasing your capacity or upgrading your facilities? And importantly, where do you fund that from? Will you take a little more debt, or will you do it via internal accruals?
No, we've got enough in internal accruals. So the total cash outlay they're expecting is in the range of 50 to 100 crores in the next 12 months, and which will help us increase our volumes as well as reduce costs again quite dramatically on our steam and power consumptions.
Okay, so you're saying that you'll be investing 50 to around 100 crores. And you're going to be growing by close to around 15%. So approximately you'll be getting around 180 crores of additional revenue. Are we getting that correct? So for the following year, you should be closer to a number of around 1,400 crores.
We should be, yes.
And earlier you had said that in the next couple of years, you'll be debt-free, and that promoter holding that is pledged, that'll be pledge-free as well. Do you hold on to that? And by when will this debt-free and pledge-free come about?
So the debt repayment has already started. I'm happy to share that we've already prepaid our FITL of 35 crores by almost 8 years. We were allowed to repay till 2030. We have prepaid that entire amount in September quarter. And the plans are afoot to engage with our banks to reduce our debt ahead of time.
What is the gross debt on your books right now, consolidated long-term and short-term? And what is the pledge on the promoter holding currently? Last we know was close to 90%.
It's about 80 to 85%, but the total debt is about 550 crores today. And with a cash inflow of about 250 to 300 crores coming in, I don't see any reason why that debt level should not come down quite dramatically over the next 2-3 years.
So June 2024, you'll be debt-free, and promoter pledge as well will be reduced, right?
Promoter pledge should be done much ahead of time, hopefully by end of this financial year itself.
Okay, all right. Quick question, Pavan. I'm looking at your stock price. It's done very well. But I don't see any institutional names. The last time you said that there were some names that were cropping up. HNIs, institutions as well.
Yes.
Anything notable that you'd like to share with us?
Nothing at the moment, Nigel. It's all sort of no comments as of now, because nothing nothing handsome to report. But I'm sure with this kind of stock price, with this kind of performance, I'm going to see some kind of interest getting generated. And so at the rightful time, I should be able to share the names with you.
The street will be watching out for that as well, because usually stock price rallies, which are, as a result of the underlying commodity price rallies with no institutional holding, tend to fizzle out over the long term, but let's hope that doesn't be the case in your case. Final question then from my end, just wanted to understand, going forward, you said that your return ratios will approach double digits as well. They're paltry, about 3 to 5%. By when do they get into double digits?
I'm sure by the end of this financial year, you will see that number coming in, double-digit growth on returns as well.
Okay, all right. And, in case you're going to be having a good year, as you're talking about, dividend you'll pay, right?
Yes, at the moment, we have to take the clearance from banks, but I'm very sure and confident that the banks will allow us and give us approval to pay dividend. We've already provided for dividend on preference equity already. And for equity, it should be along the way with clearance from the banks.
So in FY23, you'll pay dividend by the end of the year, is what you believe, going by your plan?
That's clearly the plan.
As a percentage of your EPS, what will it be? Rough number?
Hopefully 100%.
Okay, we will watch out for that. You are giving us big numbers, and you're talking about increasing capacity, growing at 15% this year, upping your revenue guidance, etc. No institutions holding. But Nigel, it'll be important to see whether the management actually delivers on what they've guided for as well.
Just want to check. You said a dividend payout of EPS will be 100%. Are you talking about?
Sorry, no, dividend percentage of 100% because EPS today is about 6 rupees over a 1 rupee per share. So it's already 600% EPS for the quarter.
100% of face value is just 1 rupee dividend. Is that what you're saying?
That currently is the plan, but yes, it can change depending on the cash inflow.
Yeah.